You find the perfect car, or you're ready for college. There's just one problem. You don't have the money. So what do most people do? They borrow it. That's where bank loans come in. A loan can help you pay for big goals now, but it also means promising to pay that money back with interest. So how do loans really work? What makes one loan better than another? And how can borrowing help you instead of hurting? In this video, we'll break down the basics of bank loans, how they work, and what you need to know before signing on the dotted line. We'll explore what bank loans are, why they matter, and how they can impact your financial journey. As we go through this presentation, I encourage you to think about your own goals and how a bank loan might support or affect them. In the lessons that you will be doing for this unit, you will be working on objectives related to bank loans. You will be focusing on 3 key areas that can significantly impact the cost of a loan. First, you will calculate and compare how different interest rates affect loan costs. Interest rates can vary greatly, and even a small difference can have a big impact over time. Next, you'll explore how different loan terms influence the total cost. The length of time you take to repay a loan can make a substantial difference in what you end up paying overall. And finally, you'll be looking at how a down payment plays a role in loan costs. A larger down payment can reduce the amount you need to borrow, potentially saving you money in the long run. With these objectives in mind, let's move forward and apply this understanding to various scenarios such as buying a car or a house. First, let's delve into why people often choose to take out loans. A major reason is buying a car. Whether it's for commuting or travel, a car can be essential for many. Purchasing a home is a life milestone for many, requiring substantial financial commitment. Loans can make this dream achievable. Another common reason is attending college. Education can be a significant investment, and loans often make it accessible. Lastly, starting a business. For aspiring entrepreneurs, a loan can be the launch pad for innovation and growth. As we explore these reasons, think about which resonate with you or your experiences. Now let's look into the basics of bank loans. A bank loan is essentially money that you borrow and are obligated to repay with interest, which is the extra money paid for borrowing. Now when we talk about the loan term, we're referring to the duration over which you'll repay the loan. This could be expressed in months or years. The principal is the original sum of money you borrow before any interest is added. And lastly, a down payment is the amount you pay up front to reduce the loan amount, which can significantly affect your loan's overall cost. Understanding these basics is crucial as they lay the foundation for many informed decisions about borrowing. Next, let's dive into the world of loan terms and interest rates, which are critical elements when considering borrowing options. Loan terms for auto loans, for instance, typically come in 12-month increments, like 12, 24, or even up to 60 months. This flexibility allows you to tailor your payments to fit your financial situation. Now, one of the most significant factors influencing your interest rate and loan terms is your credit score. A higher score can help you secure better rates, ultimately saving you money. It's also important to note that interest rates can vary significantly from one bank to another, so it's always a good idea to shop around for the best deal. Remember, choosing the right loan plan not only affects your monthly payments, but also the total interest you'll pay over time. Understanding loans is crucial for several reasons. First, it can potentially save you hundreds or even thousands of dollars over the life of a loan. Imagine what you could do with that extra money, perhaps a vacation, home improvements, or saving for the future. Second, understanding loans can help you build a strong credit score. A good credit score opens up more financial opportunities like better interest rates on future loans, or even approval for renting an apartment. Lastly, grasping the nuances of loans helps you achieve your goals without unnecessary stress. Whether it's buying a car, a house, or funding education, you'll be equipped to make more informed decisions. Remember, knowledge is power, and when it comes to loans, it's also savings and peace of mind. Next, let's talk about some common pitfalls. One is borrowing more than you can afford. If you borrow more than you earn, you should think it over. Extending loan terms might seem tempting, but it's important to remember that longer terms mean staying in debt for a longer period. It's like being in a financial marathon with no finish line in sight. High interest rates can be a trap, keeping you paying for years. and interest builds up regularly, increasing the total amount you owe. This is why it's crucial to not only focus on the interest rate, but also the loan terms. Remember, understanding these aspects helps reduce financial stress and keeps your debt manageable. Let's aim to make informed and smart borrowing decisions. Now that we understand the challenges of loans, let's explore some of the effective strategies for repaying them. First and foremost, making payments on time is crucial. This helps you avoid these pesky late fees that can really add up. Another great tactic is to pay more than the minimum amount due, or aim to pay off the loan earliest if possible. By doing this, you can reduce the interest you pay over the life of the loan. It's also wise to keep your debt as low as possible. This might mean putting a down payment on a home or an auto loan, which will lower the principal amount and consequently the interest over time. Finally, remember that a bad credit score can lead to high interest rates. If your credit score needs improving, consider taking some time to work on it before applying for a new loan. In summary, let's briefly revisit what we've covered today. Firstly, we discussed the learning objectives of this lesson. We aim to understand why people take out loans and the basics surrounding them. Next, we went over the details about loan terms and interest rates. Remember, understanding these elements is crucial to making informed financial decisions. Finally, we addressed the potential problems with loans, emphasizing the importance of being fully aware of how loans work to avoid financial pitfalls. Understanding these key points helps you make better choices, ensuring loans serve as an effective financial tool rather than a burden.